If you enjoyed this podcast, please subscribe, like, and share so we can find others like yourself. Welcome to the Bitcoin Basics podcast with your hosts, Faris and Gordon from CoinCompass.com, enabling you to safely buy and securely store your Bitcoins. All resources are in the show notes and description, including our disclaimer. Visit BitcoinBasicsPodcast.com to subscribe and discover other free content.
Good morning, good afternoon, good evening, and welcome to another Bitcoin Basics Podcast.com with your hosts, Gordon, that's me, and Faris from CoinCompass.com. Before we get started, let's do a proof of recording. So according to the bitcoin.clarkmoody.com dashboard, the current price of Bitcoin is $11,392 US, and the current block height is 645,408. If you have no idea what I'm talking about, have a look at the link in the description of the show notes. Today, we're going to interview Aleks from Amber, and we're going to talk about, amongst many things, DCA, dollar cost averaging. So the usual disclaimer, this is not financial advice. Amber is not a sponsor. We're not officially endorsing it. We haven't been paid any money. We're just interviewing someone who's interesting in this Bitcoin space and someone who has an amazing product that we actually want to use. So for all those Australians, including my family and friends, this episode is definitely for you. So without further ado, let's get started. Today we have an extremely special guest. Before we even get into introducing Aleks and his background story, which is obviously fairly interesting, we thought we'd go with the business at the front, party at the back, kind of like a mullet. For those non-Australians listening, that's a short haircut at the front, long at the back. Aleks, what, when, where, how, why is DCA, dollar cost averaging?
Oh, Jesus. I love the mullet analogy. For the record, I've never worn a mullet. Maybe one day I will. Who knows? All right, DCA. Well, there's I wrote an article about it, which I might give you guys at the end of this, so you can link it in the show notes for people to dig a little bit deeper. But effectively, the idea is that when in life, people want to invest for the future. They want to look for assets or things that they can buy today, which may over time become more valuable, that they may be able to sell for more later. Like this basic, 101 premise of investing is, buy low, sell high. Now, in the crazy world we live in today, where there's money slushing around everywhere, there's intricate markets, there's high levels of volatility across so many assets, and there's such easy access to so many different asset classes, at least for people like in countries like Australia, America, etc. It starts to become this almost like this game of gambling where you have no idea what's going up, down, or around in circles. In fact, nobody does. And sort of fundamentals has been thrown out the window. People try and sit there and, technical analysis really became big in the 80s. And, people draw all these fancy charts all over the place and think that they can read the tea leaves and know what's going to happen in the future. And that's sort of gone out the window. Then sentimental analysis sort of came up over the last 10 years. And now that's apparently gone out the window because all the hedge funds and the prop trading desks and everything have built all these crazy algos that can, front run all your trades. And, there's all this stuff happening on Robinhood where, they're selling your data of your trades to the big prop desks just before you place your trade or when you place your trade, so they can, front run you. So there's all this craziness going on. And basically what it means is for the average person, in fact, for 99.9999% of people, getting the buy low, sell high right is no better than flipping a coin. In fact, most of the time it's worse because you add emotion into the decision. And as soon as you add emotion into the decision of buying something low and selling it high, i.e. this idea of you putting some skin in the game, putting some investment somewhere, and wanting a result, you then start to make weird decisions. And what inevitably happens for people is that they end up buying when they're feeling good about something, which is usually when the price is high. and then they sell when they're scared or feeling bad about something, or when they're losing money, which is usually when the price is low. So what happens is, despite all of our best attempts as human beings to buy low and sell high, most people, in fact, over 90% of people, I think it's over 95% of people, end up buying high and selling low, and they get shook out of the market. So they end up saying, oh, this is all too hard, blah, blah, blah. Like I can't tell you the amount of people that I know who've, been trading for 5, 10, 15, 20, 30 years, and they're basically break even at best, if not, well in the red. And I can say hand on heart, I'm one of those idiots. I've been involved in markets since 2007. And if I really average it out over time, like the amount of, because I've done derivatives, this, that, all sorts of crap. And I think if I just put $10 a week aside into like Amazon, for example, I'd probably be worth a couple million just from that Amazon stock. But no, I thought I was a genius, and I decided to try and, buy low, sell high, and all this crap, and in the process wrecked myself multiple times. So the whole premise of DCA, the way I like to say it, is that it kind of takes the stupid out of people's investing journey. And it says, find something which has a high degree or a high probability of growth over the long term. And, that could be, like I said, 10 years ago when I first started getting into the markets and stuff, it's even longer now, 13 years ago, something like Amazon or Google or something like that would have been ideal for me back then. Bitcoin is probably the most ideal thing today. And, we might just go into that later, why, Bitcoin is that. But, Bitcoin represents something that has asymmetric potential, meaning, if you were to put $1,000 in it today, in 10 years time, that $1,000 is going to be either worth nothing or it's going to be worth $1 million. So your upside is much greater than your downside. So then the question is, how do you get that $1,000 exposure? Do you do it in one lump sum where, do you take the risk of putting it in, and then tomorrow Bitcoin has a, short-term crash of 30% and you freak out and you sell it? Or do you decide to take that $1,000 and split it up over equal purchases, perhaps, so maybe $10, $100 purchases, once a week, once a month, perhaps, or whatever you're comfortable with, to basically average out your purchase price. Now, some sophisticated investors out there might say, oh yeah, but I can get it better if I buy the dips, and the question is, how do you know when the dip's going to come? That's the gambling element of that people have become addicted to in the whole, I call it now the trading space. There is no such thing as investing space anymore, because people don't think about investing. They don't think about the long term. They're trying to make a quick buck. And DCA is really like a way to come back to investing, to come back to thinking about growing wealth over the long term, and to do it incrementally. Like, if there's one thing I regret in my life, is that I wasn't sensible when I was younger, and I didn't build up a kitty just week by week. It didn't have to be much. And especially with, the madness of the world and the money printing and all that sort of stuff, like we've seen, back when I was looking at Amazon in 2008, it was $35. I want to punch myself in the face when I think about the price that it is now. And that was all because I thought I was a genius and that I could time the market. And you can't. You're on one side of the equation of the other. You either think you can time the market, or you decide to spend time in the market. And the latter is what DCA allows you to do in a manner that is sensible, versus trying to be a hero and timing the market, which in today's day and age, you categorically cannot do, because you're competing with people who are running algos that are literally plugged directly into the trading desks at the New York Stock Exchange. You cannot beat a hedge fund. That's the thing. And if you think you can gamble your way in, good luck to you. When you come back wrecked after a few years, you'll wish you started DCAing beforehand. And that's really like what the whole premise of this is about. Like, it's a principled approach to long-term investing that says, forget about trying to time everything. Forget about trying to predict, whether it's going to go up, down, or around in circles. Forget about trying to know everything that you cannot know. Just take a small amount and regularly put it into an asset that you think has long-term upside, and just almost treat it like a little savings account, like a piggy bank. That's the whole premise of dollar cost averaging.
I really like, Aleks, the example you use of Amazon, because a lot of people don't know that Amazon has had, I think it's 3 90% corrections since it was launched, and several like 30% corrections plus. And like you say, people would have panicked and sold. And I think that's a really good example to compare Bitcoin to, is that it is a technology, it is a currency, it is a store of value, something that we are still trying to explain to people. And yeah, hindsight's a beautiful thing when you think how many people would have held on to Amazon when it crashed 90% first time, second time, and third time.
And barely, I would say that 5% of people would have, if they were lucky, hung on. I mean, I didn't hang on.
Yeah.
When I think about it, I bought Amazon at $50. And then I got freaked out because, it went from 50 down to 40. And I was like, holy crap, that's 20% drop. So I dumped it. All because I was trying to be a hero, and, scalp the extra dollar or two. When you think about it, that $50 to $40 drop, now you look at it, it's like Amazon's $3,500 a share. It's like, you idiot. Like that's the price of trying to be a short-term thinker versus a longer-term thinker.
And that's what it really comes down to, doesn't it? It's in this day and age, we're kind of dissuaded from savings because, you put some money in the bank and there's inflation and that money just basically gets eaten away. We won't go into a whole taxation thing, but that's what I've been trying to explain to people is that, treat this Bitcoin savings or this Bitcoin accumulation or collection or whatever you want to call it, like a savings account, but instead of a savings account in the bank that's losing your money hand over fist, it's a savings account that's actually appreciating. So you don't have to have that arrogance, that hubris that we've all got. I did it. I FOMO'd into Bitcoin. Then I discovered the altcoins, got totally wrecked, then came back to Bitcoin. And I'm like, why am I trading? I think it's generous to say 95% of people make money, don't make money. I think it's 99%. But yeah, you just take out the volatility. So sometimes you buy at a slight loss, sometimes you buy at a slight profit. It doesn't matter. In the long run, you're averaging out. And in the long run, orange coin go up.
I mean, you got to really decide what you want in life. Do you want to sit there like a degenerate looking at your computer and refreshing the chart every 5 minutes and trying to place a trade? Or do you want to just set up, this is why I built Amber as a product. It's like you just tell the app, I want to buy $50 a week. Here's my bank account. And just leave it. And then you can go ahead and live your goddamn life. I'm sure you've got more important things to do than staring at a computer at a bunch of green and red candles and trying to draw, fancy lines all across the screen and think you're Nostradamus. It's so stupid. I can't believe people don't have better things to do with their lives than sit there and try and do that. It's like such a waste of time and energy. And I don't say this as, I'm holier than thou, because I was that same idiot doing that for so many years. I think about all the time I wasted messing around on markets and trying to get an edge, whether it was with derivatives, whatever product. I've traded everything you can think of. And I cannot tell you the amount of hours, time, money, energy I've wasted doing that when I could have done something actually productive in my life.
Not to mention your emotion as well. I mean, I'm sure you had the same feeling. You're in a bad trade and, your stop loss is getting hit and it's like, oh my God, I'm losing money. Yeah. Honestly, I had so many sleepless nights. I was checking my phone and there was alerts. It's insane. Yeah. We're not meant to live life like this.
Yeah, you're like a junkie, basically. You're like a junkie. And that's why I think DCA is the cure to trading junkies. Maybe I'm going to make a meme about this, but it's it's what it is, right? It's you can be a junkie that wants to get your dopamine hit and then sit there and spend most of your time developing cortisol, excess cortisol because you're so stressed out, or you can get on with your life, sleep well at night, and know that you're collecting. And this is, I guess, where the Bitcoin argument comes in, is like, there is nothing that there is no thing on the planet today that has as much potential upside as Bitcoin, because the market for money is a winner-take-all market, and it is the largest market on the planet. There's nothing larger than the market for money. And the thing is, Bitcoin is the best version of money we have. And should it succeed over the next 2, 3, 4, 5, 6, 7 decades, however long it's going to take, just like gold took millennia to succeed and become, the emergent form of money that people, through a process of self-selection, decided to use for money. Bitcoin so too will do that, because you can't stop economic Darwinism. At the end of the day, everyone needs to store their labor in something that doesn't dissolve, that doesn't disappear tomorrow. And just like salt was replaced as money, so too will fiat, because they both dissolve. Their value dissolves, and Bitcoin represents the next genesis in that. And it doesn't matter where on the spectrum you are. If you're a crazy person like me who tries to hold minimum fiat and just pours everything into Bitcoin, or you're a beginner wanting to sort of get in and just want to have a little bit of exposure, say 1, 2, 3, 4, 5% of your net worth, have it in this thing that you may not fully understand, but you at least grasp the concept of, like as a digital gold or whatever someone wants to frame it as. The best method to get some exposure is to just DCA in small amounts incrementally that you're not going to notice. You are categorically not going to realize $50 a week or $20 a week, whatever you're comfortable with, in a couple of years' time. Like, that's $2,500 a month if you're doing, $2,500 a year if you're doing $50 a week. And after 4 years, that's 10 grand. And I mean, that if you've, if you've done that right, over the next 10, 20 years, that 10 grand could be worth a couple $1 million equivalent. You show me one other thing that has that kind of upside potential, or at the very worst, that $50 a week, oops, you lost it. Oh, well, you didn't even notice it.
That's a good point. And just to translate what you just said about asymmetric risk, $1,000 today, or over time, let's say $100 today could potentially be, $100,000 in the future. Yep. But if Bitcoin goes to zero, which is unlikely, but could happen, you've lost $100. Yeah. So you see the reward versus the risk. And there's just no excuse. I'm sorry, but I kind of get a little bit aggressive about this. And, maybe 5 years ago when we had all these problems with exchanges and I got bitten by the Mt. Gox thing and all that kind of stuff, it was difficult to get into Bitcoin. Mm-hmm. It was. Mm-hmm. So it's like, I have to verify myself, take a selfie with my ID or whatever. But nowadays, and I'll get you to shill Amber and go through that process, there really is no excuse not to buy Bitcoin. There just isn't.
Yeah, it's so much easier now. That you're 100% right. Like, and it's funny that you say that, because that's exactly what I tell. I wrote an article recently, and it was entitled "Do Not Buy Bitcoin," and I dedicated it to the skeptics and to the naysayers and to the shitcoiners basically out there. And the whole premise behind it was, hey, I'm sick and tired of trying to convince you to buy this. This isn't 2012 anymore. This isn't 2013, where you've got some emergent thing of the internet, that's, worth $100 that's going up and down $50 every day. Like, this is now a real thing. This is now something that, businesses like MicroStrategy, are putting their entire cash reserves in. This is something that Paul Tudor-Jones is buying. Like, this is not a game anymore. And if you don't want to buy it, or if you're skeptical, no worries. Come and buy it later when it's $1 million. A coin. I'm more than happy for you to come in later, because this is like, I'm tired of having to, convince everyone for their own good. And these days what I do is I do less convincing and more like, whenever I see, one of these hedge fund people say, oh, Bitcoin's a bit expensive, I'm looking at XRP or something, I jump in there and I say, yeah, XRP is the best, it's the standard. You should totally buy this. Bitcoin is for losers. And I just support them on their journey to getting wrecked because I don't
Touch
care
the
anymore.
stove.
That's it. Exactly. Yeah. Because you need to learn that. And such a good way to phrase it, man.
Aleks, I'm just wondering, like customers coming to Amber, or what are still some of the common misconceptions about Bitcoin you're coming across? The ones that you're willing to address.
Yeah. Okay. I mean, people that are coming to Amber have kind of generally been referred by their friend who's, like a Bitcoin maniac already. So there's not too much of a misconception. I think some of the ones that I get are like, it's pretty expensive. Like, it's like $18,000 a coin. How am I going to buy that? So there's still usually, the unit bias. And that's why Sats is like a standard representation inside Amber. So you can swap between Sats and full Bitcoin denomination if you want to. So we try and help people understand that a little bit so we can solve the unit bias problem. I mean, there's every other misconception as well. It's like, oh, I thought Bitcoin was dead. So we haven't seen a huge influx of customers, to be honest. In fact, like our total volume keeps increasing, but the volume is actually increasing as a result of people who are already using Amber buying more Bitcoin as opposed to a big influx of users. So for example, just to give you just some anecdotal stats is that our volume has doubled over the last few months, but our user count has only increased by, I think, 15%. So what that tells you is that people who are already using it are like buying more. There hasn't been a huge retail influx. So I just don't think it's even on many people's radar at the moment.
Well, you mentioned Robinhood earlier, and that's actually been one of my concerns this entire year is Bitcoin's actually been tracking heavily the S&P 500. So I think because people are stuck indoors, they're getting government handouts. I think they're just trading Bitcoin as a risk-on spec asset. And that's why I think the price has been correlated to that and not necessarily to the fundamentals of Bitcoin.
Yeah, to a large degree. I mean, but that's again another of these we live in a fiat society where everyone's sort of short-term trying to gamble their way into, riches and, not instead of doing anything productive with their lives. So like, I think apps like, Robinhood are a plague to society because, they don't teach anyone anything, like fundamental. They exist to help people, gamble just from your phone. And it's no different to betting on a horse really, because none of these people are actually doing any research on anything. They're just buying it because the next person bought it. And yeah, like it takes a rare character to really understand Bitcoin today. And now this is going to change over the next few years. Like this is one of the things, this is why I kind of wrote that article where I like kind of threw my hands up and said, look, I'm not going to try and help you or convince you anymore. Like, you're either, I said this on a TFTC Tales from the Crypt podcast like a year and a half ago, 2 years ago, which was you come to Bitcoin either from curiosity or via pain. So like because you want to or because you have to. And that's the thing, like, you're either like we are all here now not because we genuinely like have to, like, we could get away with living in the normal system and all of that. And yeah, we cop inflation and tax and all that, but we can probably get by because, there's other people getting by, right? But we're curious enough and we're driven enough to ask the question of, is there a better way? And to also inquire into the nature of this thing called money, this technology of collaboration that humanity has invented, or that has necessitated, what's the word I'm looking for? That had to be invented in order for humans to collaborate. Like, we just seem to call it money, but it would have, we may have had a different name beforehand, but there is no other mechanism for collaboration amongst humans, because what we collaborate through is our time and energy, like our two finite resources. And we all use time and energy in our own capacity, and that's our inputs into society. So we need a mechanism through which to measure and exchange that stuff, and that's effectively metaphysically what money is. And some of us are just curious enough to go in and inquire into that and then start to inquire into, what's this Bitcoin thing, and why is it a better form of money? Why is it a better way to represent that time and energy that we all have an input into society with? And so for some of us, the light bulb clicks, and we're like, holy crap! Here I am. I am like the dude from the ancient times when everyone else was still trading in shells, and I found a gold nugget on the floor, and I went to buy a chicken with this gold nugget, and the guy selling the chicken looks at me and is like, what the hell am I going to do with this yellow rock? I can't wear it. I can't eat it. And you're like, well, look, it's got these properties, and one day everyone's going to use it as money. You get laughed at, and if you could somehow have been that ancient person to hold that yellow shiny rock for a couple thousand years, you would have been extremely wealthy. And what we're seeing that happen with Bitcoin today, but instead of over a couple thousand years, we're going to see it in decades. And you're effectively picking something up before the rest of the world catches up. And that's a powerful place to be in. It's an incredibly powerful place to be in. And yeah, I mean, it takes a certain kind of personality to be into it now. It took a certain kind of personality to be in it during the last phase, the last epoch. And it's going to be a different kind of personality that's going to come into it later. So like a lot of people, here's the thing, most people will come into Bitcoin when it's worth somewhere between $1 million to 10 million per coin, fundamentally. And that's because that's when they will trust it.
So Aleks, with setting up Amber, how difficult was it to get that set up, thinking from a regulatory standpoint?
It was, look, Australia, I must give credit where credit's due. Australia wasn't too bad for that. I had some connections with some banks over there, so I managed to get us an account relatively quickly, and that sort of got us up and running. Without that, it would have been much more difficult. That's the problem that I'm having now, expanding Amber outside of outside of Australia, is that getting banking is actually the bottleneck, because it's almost impossible to get a bank. Like I got a bank the other day, sent me an email. They're like, oh yeah, we'd love to help you. We have a due diligence process and you have to pay for that. And that due diligence process is quite in depth. It's probably going to take between 2 to 6 weeks. And we charge you for our due process, €5,000. And then we charge you €1,000 per month for the privilege of having a bank account. Oh, and by the way, because our bank is based in Germany, we have negative interest rates, so we're going to also charge you 0.5% on the money you keep. And I'm sitting there looking at this, I'm like, what? So it's like, it's insane, right? So like, so coming back to Australia, Australia wasn't that bad because we registered with Austrac, obviously, and we need to do all the the KYC, AML rigmarole. But fundamentally, we managed to because I was in a bit of fintech before, get a partnership with a payment provider so we could do direct debit. So we did direct debit, we got the bank, we did all that stuff, and we've been building features and everything ever since. So the app is like really slick, smooth, functional. It does everything it needs to do now. And I would argue that it's the best way to buy Bitcoin in Australia now. It's like it's in your pocket, it's in your hand. You can click, you're done. Like it's so simple, so quick. You can send money to it now as well via EFT, so you can load up your account with dollars so it's ready there. You can set we're introducing. We're going to do intraday DCA as well in the next couple of weeks, where you can buy hourly if you want. So you can load up $1,000 into your account and say, look, I just want to buy $10 every hour. So you can really smooth out your DCA. So it's got all these cool features, and we managed to get that locked and loaded relatively quickly. I think the most difficult part for us, and which is sort of the case with most tech startups, is just building good software that scales. And we had a bunch of difficulty with that in the beginning. So I would say Australia was less a regulatory issue for me, more just getting the right product out. And now that we've got that, now expanding it outside of Australia is more a banking regulatory issue because, they want to, like I just explained, your grandchildren's future just for the privilege of having a bank account. It's disgusting. So yeah.
With that, so talking about negative interest rates and all this, I know like a lot of people in the know what's going on as far as reserve bank asset purchases, all this kind of stuff. But I think the majority of the population still really don't know. They still probably think it's a COVID thing. Are you finding, though, that people are coming to Amber, people want to learn about Bitcoin, not because of Bitcoin itself, but because of what's going on in financial markets and fiat currencies themselves? So it's kind of, they're looking at Bitcoin as an alternative to government and fiat currency. Are you finding that shift happening or not yet?
A little bit, but it's more actually from the people. So I've got a couple, actually what I would consider baby boomers, right? So like the couple older gentlemen that have both invested in Amber, but also have been were traditionally wanting to buy some Bitcoin, but like really only dip their toe in. So they're relatively wealthy. Like, so, for them, $5,000 was like 50 cents. And, they were like sort of hesitant about putting the first, couple $1,000s into Bitcoin and this and that. They were more comfortable investing in a company because that's sort of, the frame of reference that they understood. But as things have started to deteriorate around the world, as, things have become more stupid, their purchases have like really, really increased in terms of volume, because now they're like, I've got this property and, it doesn't make sense to hold anymore. And then I've got money in the bank that's sitting there, and now like I'm getting absolutely nothing for it. And I'm seeing the value of the Australian dollar fall, blah, blah, blah. So like they're really starting to think now. These guys, I would sort of put them in the bucket of a little bit more sophisticated. So I don't know if that has trended to the more mass market, or the general retail psyche as yet. But it's definitely starting to trickle in. Like these two gentlemen that I'm mentioning is like they got a tech background. They were coming to my meetups for a couple of years, and it wasn't until things started to get really messy in the world that they then kind of spooked and were like, okay, we need to do something about this. Like they got and understood Bitcoin before, but they didn't do anything with it because of that reason. So it's interesting to start to see that shift in the world. But I mean, one can only assume that's going to continue to accelerate. It's like one of those mind viruses that, once it's started, like try put the genie back in the bottle. It's not going to happen.
Oh, absolutely. This is just going to open the floodgates. You can't uninvent something. So even if governments try to ban it, I just see that as more bullish for Bitcoin.
Oh, it is.
By the way, anyone listening to this, we're 3 Aussies, but none of us is actually living in Australia, which is kind of ironic. Aleks, so I'm going to share this with pretty much all my family and friends and everyone I can think of. How do they get started with Amber? And so feel free to go through that. And what privacy and security concerns, if any, are there? For example, what kind of backdoor channels do you have with the ATO?
Okay. So Amber, let's start with how they set up. Like, first of all, at the moment we're only available in Australia, so you need 2 things. You need to have an Australian bank account and an Australian phone number. As long as you got those 2, you're sweet to set up. Like, you don't have to be an Australian citizen. That helps. It makes just the KYC piece a little bit smoother. So you download the app. You put in your BSB and account number there. So kind of like a standard, what you would do with like a normal direct debit if you're going to the gym, for example. So that's nice and easy. We used to have roundups where we would track your expenses. So you'd go buy a coffee, for example, for $3.50. We would see that on your bank statement. We'd round up the transaction by 50 cents. We'd, aggregate those, and then we would, buy Bitcoin on a $5 increments for you. What we ditched that because, privacy is really important to me. And like, we needed we needed to know your entire transaction history, and we needed your bank credentials to actually go in and do that. So we kind of ditched that as a feature. I just didn't sit right with me. I just thought if people really want to buy small amounts, they can just do $5 a day direct debit. Who cares? So it gives you the same result with much less intrusion from us as a business. So you do that. So you download it. You pop your BSB and account number in. You sign there's like a little form in there for your direct debit. You can then, like you've got the ability to, I think, to buy your first, I think it's $100-200 without having to KYC immediately, but you can't withdraw your Bitcoin until you have KYC. So then you just need to upload your driver's license and Medicare, for example, or your passport, whatever you've got handy. And that's really quick to do because we do a check with what's called the document verification system, the DVS in Australia. So you don't really need to upload the docs. You just need to make sure that the details are correct in there. So you do that, we ping that, we check it, and then that sort of unlocks your account. And then the third step of verification, which we do just to prevent fraud more than anything, is we send you a bank account verification amount. So you get this special code that's like lands in your bank account, which is you get 1 cent basically. So that's our token to you, 1 cent with a special code. You put that in, and that verifies that you own that bank account. And then you're good to go. You can load up your account, or you can use the direct debit. Soon we'll have Apple and Google Pay, so you can whack a credit card as well in there if that's easier for you to purchase, like a credit card or debit card, whatever's easier for you. And that's it. You like buying is so simple. Like there's a one-off for recurring, so you click the buy button, you click one-off for recurring. We've got this cool EFT feature as well. Is like you can actually, instead of just sending dollars to your Amber account, so let's say you got $500 there and you want to send it across to your Amber account, you can actually have it sent as dollars from your bank account. And when it lands in Amber, it automatically converts to Bitcoin, which is a kind of cool feature. So for those people who want to avoid because we have a direct debit fee, and it's not us charging it, it's just we just pass on the charge at cost, which is 25 cents every time there's a direct debit. If you want to avoid the direct debit, you can just set up a recurring transfer from your bank account of $5 a day or $50 a week or whatever frequency you want. And then every time it lands, it auto converts into Bitcoin, which is a really cool feature. So that's sort of how it works. Then in terms of backdoors and stuff we don't have a relationship with the ATO. We've never been asked for anything. We've never done anything. We just have a transaction record of all customer purchases because customers need that. You've got a transaction history inside the app. If the customer wants to request that, they can, because they'll potentially need to do their own taxes. But other than that, we don't I've been asked multiple times by assholes like Chainalysis and all this other stuff to implement what's called coin provenance technology, which is to track where your coins are going and where they're from and all that sort of stuff. And I have told them to jump off the bridge and make sure they land on the concrete every time, because I have no interest in implementing that kind of surveillance technology into our application. So yeah, man, it's
Excellent.
about as private as you can get in Australia. Most of the exchanges in Australia, believe it or not, use Chainalysis or some sort of coin provenance technology. I think we're the only ones who don't.
Yeah, I was tongue in cheek about the ATO, but I actually just bought some Bitcoin from my dad. I won't say where, but it was on a prominent Australia exchange, and you're basically, giving a blood sample and pretty much everything to verify yourself. And for a fact they're doing all kinds of stuff behind the scenes. But that's good to hear. Lastly, are you encouraging people to take Bitcoin, withdraw Bitcoin from your wallets, like hot wallets, cold wallets, whatever, to their own storage? Do you provide people with their own Bitcoin wallets? How does that work?
Yeah,
what's the custodianship like?
We don't provide their own wallets, because that's sort of outside of our wheelhouse, and something we'll never probably do, because I think there's so many other better people who focus on just building good wallet tech. So we just make the ability to withdraw super easy. So we hold everything in multi-sig cold storage. So you've got in your app, you've got a function to just request the withdrawal, and we just do daily batch withdrawals. So people's withdrawal requests come through. We then put them through our little multi-sig storage, and we just withdraw based on what you want. And I encourage people to do that when they're comfortable enough self-custody. So we kind of call the way we hold the Bitcoin at the moment, we kind of call it cold storage or multi-signature as a service, which is we're sort of pretty damn confident how we've set it up with Unchained Capital, with multiple signatures, with different people around the world. So it's basically impossible, unless you can crack the Bitcoin blockchain itself, you're not going to get access to that because you can't get myself and one of the other parties who's required in the same room because we're on different sides of the planet to co-sign something together. So it's pretty damn safe, and we've got some redundancy in there. If one of us disappears, then Unchained is the other signatory. So it's pretty damn safe, and it allows people who aren't yet versed enough in how to store their own keys, because that's effectively what you need to be versed in when you want to take custody of your own Bitcoin, to leave it on there and be basically, you can rest assured that it's, as safe as can be with a custodian effectively. Now, as you start to learn a little bit more about this and you've got your own wallet and you know what you're doing, by all means, we've made it as easy as possible to withdraw. And we're also releasing a feature soon, which will be auto withdrawal, where you can just set your thing to clear out your wallet so you whitelist an address, and every month it'll send all the Bitcoin inside Amber into your own private address. You won't even have to do it. It'll just do it all automatically for you.
Yeah, I was actually just going to ask you that, if you could say when my wallet gets above $200, just sweep it out into my hardware wallet or something like that. Yep. Oh, that's excellent. Fantastic. Now, what I might do with the magic of editing, because we actually got a question a couple of days ago, and I might just splice that in right now.
Hi, guys. Wanted to know why Bitcoin is the number one supreme cryptocurrency out there. There's so many others like Ethereum, which seems to be gaining momentum. But why is Bitcoin the one that seems to have conquered all? There's so many others. So what's the difference between Bitcoin and all the others? And why is Bitcoin being so successful? Thanks, guys.
It's a common question. Faris and I have done this 30 days of Bitcoin when we answer questions, and most of the questions are pretty similar. But this is probably the most common question. And this is a question I get almost every day. Why Bitcoin? Why not Ethereum? Why not XRP? Why not insert random name of coin here that's gone up 3,000%? Why Bitcoin, Alex?
Okay, big question.
I know.
This is, as we kind of discussed earlier, the money is the mechanism via which human beings can collaborate at scale. And it's the only mechanism, that is the mechanism through which we can store and exchange our labor, our time and energy. And that is the thing that's most broken in the world today, and that's what's bringing about a lot of derangement. When you give an institution, whether a bank or a government, the monopoly on the creation of that, what you start to do is you start to tear apart the fabric of society, because one small group can create time and energy effectively, which is what money represents, out of thin air, whilst the rest of us have to trade our time and energy for this unit called money. So that starts to really destroy society. It starts to decay society. And it's kind of like, the best analogy I use is you're playing a game of Monopoly, and one dude is just keeps pulling money out of the till. It's unfair for everyone else, but that's not how the game is played. And that's effectively what we've got in the world today. So it's a big deal. And this whole revolution of Bitcoin is Bitcoin's fundamental invention was two things: a unit with digital scarcity and a network that achieves consensus autonomously, without a party running it, without a governing authority, where each participant makes up a node on the network. So those two things combined give us a monetary unit and a monetary network that have some particular attributes. The unit is unconfiscatable, it's uninflatable, the network is uncensorable, and nobody can mess with it. Nobody can get an unfair advantage on this network. And as a result, there's multiple other things, like the founder disappearing, the timing of the launch in 2008, the fact that it was first off the press, and there was for the first 5 years, everyone was laughing at Bitcoin, and that is what allowed it to actually emerge organically without some sort of organization behind it pushing it that could get an advantage for itself. It's the ultimate organic emergent creation on the internet, and what that's resulted in is this multiple other network effects of like the brand, the liquidity, the infrastructure, the mining power, like all this other stuff, which now become these self-reinforcing network effects that makes this thing stronger. And what ends up happening is, because money is fundamentally a shared language amongst everyone, and money's utility continues to increase when everyone shares the same language. Like, it's why we have $1 inside Australia, right? So within that jurisdiction, we all use that, because if we all had a different money, we couldn't actually trade our labor efficiently. So no matter what you do within a particular jurisdiction, money will always converge to unity. And the thing is, the internet makes for one big unit, like it's one big jurisdiction where a single most functional, fairest, and like the money with the best attributes is going to suck up all the liquidity. So you've got all these factors that mean, so you've got this, like I said initially, money's the thing that's broken. It's also the biggest market, and it's what Bitcoin was designed to be. And it's this thing that is it's digitally scarce, and it reaches autonomous consensus, which are the two things that nothing else on the planet has. And by definition, digital scarcity is a one-time event. It occurred with Bitcoin. You cannot have digital scarcity again. So, like, you can go and copy Bitcoin. One of its most important attributes is that you can copy it, and, we can create, Bitcoin Alex's version. And, what's the economic mass that's going to follow that? Maybe a few idiots, but other than that, nobody else, right? So it's, Bitcoin's economic mass is all behind it. So all these other things, they're short-term noise on the path to the evolution or the emergence of a fair global money that can't be confiscated, that can't be manipulated, that can't be messed with. And that's why sort of Bitcoin is the real game in town, whereas everything else is just something out there that...
Come on, Alex. We've got a world computer and DeFi and digital kitties, smart contracts. XRP spreadsheet is like 5-second block time. Surely they're better than Bitcoin.
This is what I mean. It's like, I kind of said, I wrote this piece called the Bitcoin Times, which kind of said that, like, these Rube Goldberg machines, like in the case of Ethereum, like Bitcoin's recipe, the uniqueness of Bitcoin with mining, with cryptography, with all these things that it is, gives you digital scarcity and gives you censorship resistance. It gives you these attributes which are only really useful for something that is as important as a money that is unfuckwithable, like, if I'm going to use that word, pardon my French, but it's that's the application. There is no application other than something as important as money that you would be able to justify building such an infrastructure for. So as a result, that's game, set, match there. And then with XRP, anyone that talks about payments is a complete lunatic, because here's two reasons. One is fintech's going to blow all of these other stupid things away. Like, we can already do international payments. Like, I don't know if anyone's ever heard TransferWise. It's quick, it's fast, and it works, and it's only going to get better. So payments is not an issue, number one. Number two is that with a foundation like Bitcoin, which is like open and provides basically an internet-based central bank that is permissionless, anybody can build payment infrastructure on top of that without having to ask anyone anything. Like, so what I described before, where I, as a company, want to get a freaking bank account in Europe, I need to sell my children's kidneys just to, get a bank account. Bitcoin doesn't care. I can create a payment application on top of Bitcoin just by plugging into it. And that's where the future is going to be. And you've got then a situation where we can build millions of nodes to route payments as layers on top of Bitcoin, where you'll end up with billions or potentially one day trillions of transactions per second as a throughput, versus the shitty 100,000 or 200,000 transactions per second that Visa or MasterCard can handle today as centralized systems. So Bitcoin blows out all of these things, but it starts with the first principles, which is, what do we need to fix? the money. How do we fix it? We have a unit that is, that is unconfiscatable, uncensorable, uninflatable. We achieve that through digital scarcity in a network that achieves autonomous consensus. It's a one-time event. It's an emergent, organic evolution, something that happens not by someone's enforcement, but that happens organically via the market. And all of those things happen with Bitcoin, and it's done and dusted. The game's already won. Everything else is just noise along the way.
Just finishing off that analogy, and we like to beat the dead horse until there's nothing left on the side of the road. But going back to your monopoly analogy, we all know, governments are printing money hand over fist. So it's like playing a monopoly game where the banker can just print more money. With crypto, people say, with blockchains and crypto, you can't do that. And it's like, no, you can't do that with Bitcoin, but you can with pretty much every other altcoin, because there's still a foundation, there's a company, there's some sort of developer that can still change the game. And you don't have to look too far to look at the DAO and Ethereum. Not to pick on them, because I think pretty much most coins are the same. You can still do that. They can still, change the amount of coins or change the inflation supply or do whatever with those other coins. But Bitcoin, you can't.
Mate, you touch on a beautiful point there. Is like, I put up a tweet a couple of weeks ago which said crypto is actually more like fiat and less like Bitcoin. So Bitcoin stands against government fiat, but it also stands against crypto fiat. So all the crypto, all the Ethereums and all this sort of crap, all they do is they're saying that, hey, the government are a bunch of assholes because they think they can print the money on their rules. Their rules suck, so we're going to create our own rules and we're going to create our own money and come and join our network. It's like jumping from the fry pan into the fire. So instead of having your wealth expropriated or managed by a group of central bankers and political retards, you've got your money managed by a bunch of dweebs, nerds, and 14-year-old virgins who who don't know anything about economics, but can write some sloppy code and hope for the best. It's like nothing's changed. Like, crypto is just a more fragile version of the existing system. In fact, I would almost, like, there's pros and cons. I would actually trust the existing financial system, at least from an inflationary perspective, because it'll probably go through less inflation than the monkeys who are running their crypto networks. Although the crypto networks, there's a little bit more permissionlessness there. So, you could potentially build more applications than you can in the legacy financial system, but it doesn't matter. They're both fiat. They're both by definition fiat. They're both run by someone. And this is what no one seems to get, is that Bitcoin transcends all of that. And yeah, like I see I see very, 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 very few similarities between Bitcoin and crypto. And I think Bitcoin stands against everything that crypto stands for. And crypto is going to be like a water balloon getting thrown at a brick wall. Like, it's gonna pop, man. It ain't gonna last.
So with that, Alex, and I know there's fascinating stuff happening in the world of Bitcoin with side chains and Lightning and everything, but people that are buying Bitcoin, do you think they honestly care about Bitcoin as everyday transaction purposes, or they're just really looking at it as a long-term store of value?
Well, I mean, some people, I guess, do. But like I said, this is economic Darwinism. Survival comes first. I don't care what anybody tells you in life. People worry about having a house over their heads, like a roof over their heads first, and food on the table. Like, survival comes first. And, being able to have an alternative payment system, is nice, but being able to protect your wealth is a must. So there's no argument between the two. So, if you want to, let's say you want to transact and you're living in a place where you're, under an iron curtain and you're not allowed to transact, then in that case, having an alternative payment system is extraordinarily important, right? So then that's a must. So but the beauty of Bitcoin is that it does both. So it doesn't matter. Like, so for those of us in like Australia and all that sort of stuff, where we have Visa, we have FPOS, we have all this stuff, we're fine. We don't really necessarily need Bitcoin for, as an alternative payment system. But, as the world, becomes more deranged, hey, the importance of that element of Bitcoin is going to increase. But right now, like, realistically, people are coming to Bitcoin because it's an asset or it transcends even the concept of an asset. It's a money that has better attributes and gives you a better guarantee of storing your wealth for the long term.
And I know it's a meme, but it really is a hedge against inflation. It's like, don't put 100% of your savings and whatever investments into it. Do some DCA. Just do 1%. Just don't have zero. That's basically my argument at the end of the day. Just have something.
Yeah, well, if you got zero, you're at this point you're either ignorant, and like, look, some people are blissfully ignorant, and that's fine, whatever. But some people are willfully ignorant, and that's where you basically you get what you deserve in the next 5-10 years when someone is like, again, I said in my little article, I was like, I'll smile when I'm paying you a couple thousand satoshis for a month of your time, because you laughed at me when I was buying millions of satoshis for a couple $100. So it's what goes around comes around. So
yeah, thanks for agreeing to come on and have a chat. And it's good to actually finally talk to someone from Australia, because we love our brothers and sisters in America, but it's so US centric. It's like people talk about the Cash App, or people talk about Swan Bitcoin, or they talk about this exchange. They're like, yeah, that's great, but I can't use it.
Yeah.
For all my family and friends,
awesome.
You have no excuse whatsoever.
Indeed. Like, so true. Like now, like it's like at this point in time, like you said, it's you. The excuse doesn't exist. So it's either now like willful ignorance, like the innocent ignorance is the phase of innocent ignorance is almost gone. So, in the next couple of years, no one will be able to say, "Oh, but I never heard of Bitcoin, or I never had a chance." Like, that's that ain't going to exist anymore.
Exactly. And everyone has $10 they can chuck in per week or per month. What's the minimum you can throw in?
The minimum is $5, man. So if you want to do $5 a month, it doesn't, like, whatever. $5 a year if you want to. It doesn't really matter. Like, do what you want.
Excellent. Well, we'll link to all your Medium articles and Twitter and whatnot. Have a look in the show notes, people. Yeah, Aleks, thanks again for coming on and sharing your Bitcoin knowledge.
Brilliant. Thank you so much.
Thank you very much,
I really
Aleks.
appreciated the chat. Thank you.
Cheers, mate. Thanks for watching or listening. Please visit coincompass.com/free to register to our socials and discover other free content. Subscribing, liking, and following helps this content remain ad-free. Until next time.